What's up, money lovers? Welcome back here today with a special guest. We got passive income investor. Thanks for coming on to chat again.
Always a pleasure, brother. Between the midterm market rally here, I mean, just getting off the jobs, got my suit on. Feel a little bit more relaxed for this combo, though, hopefully. But yeah, man, there's a lot going on.
Yeah, I like the suits are a nice touch, looking dapper on your channel now. And hopefully, we're just talking a little bit about the past few days and this crazy bull run. Could be a bull trap. Nobody really knows in the short term, but there's definitely still a lot of issues out there. But I'm sure we all have heard enough about those. So I wanted to start by asking you, you've said Canada has the fastest growing population and that your economy could even outpace the US, or it should. And I'm an American investor, I think either way it's important to get at least some exposure to foreign markets. And I'm sure historically, most Canadians invest in US stocks, but most Americans don't invest in Canadian stocks. So I guess if you were looking from the outside to invest in Canada, what would you suggest to people? Are there Canadian index funds or individual stocks that you think are like the go-tos?
Yeah, so I mean, the challenging thing for me was the reason that I got really out of the Canadian markets, like over half my portfolio is US, is because you got to look at currencies, right? Like currency risk is usually the biggest problem for owning specific assets in specific places. And if you looked at the Canadian dollar from like 2016, I think 2015, 2016 to basically where it is now, like it's degraded to the US dollar by like 20 to 25%. So my biggest fear was watching the currency degrade too much. And then even though if I'm selling those assets, yeah, you got to kind of bake in the fact that they have 25% less purchasing power, right? Like that's a huge loss that most people, even in the US, don't take into consideration when they're buying stocks. Because even though the markets in 2021, 2020 just really rallied off the March 2020 pandemic, they didn't really take into consideration that because they printed so much currency, right, that the dollar deflated by like 10%. So it's like people forget that that bakes into their investment portfolio. So when they say inflation, plus like minusing that out of your gains, it's just something that most people just don't realize is going on. It's like everyone's saying today that if you're not getting at least 6 to 10% return, you're not even beating inflation, right? So it's even harder now to get a return from the market, even though stocks are going up. So I think people are underestimating a lot of that, and that's a lot of one of the reasons that led me to really foreign diversify my portfolio. So from the US perspective, I think now is a really good time frame to get involved in the Canadian economy because it looks like our dollar is basically leveling off. It hasn't been nearly as volatile lately, and putting it in the US dollar, right, where there's obviously a lot. I mean, it just, they both the currencies go through these fluctuations. There's just a matter of, there's a lot better economies out there, right? Like China arguably is a much better growth economy right now than the US if we're talking about valuation metrics. Canada is fair value, to my opinion, because our top weighted holdings look nothing like the US. We're the top 10 are basically financially weighted, a little bit of energy in there. And then, of course, I mean, you get some of the odd tech stock like Shopify. But when we're talking about like our foundational stocks, they're not trading at these massive premiums like they are in the US. And with an economy of only 40 million people compared to the 500 million that are in the US, you can just see that there's a lot more scope for growth based off the fact the government is really allowing a lot of population income and just foreigners come into the country. So, I mean, you're seeing it in real estate. You're seeing it generally in the stock market right now because when you look at companies like TELUS, it's probably one of my favorite examples. Telecom company compared to the U.S. telecoms like AT&T that have been getting crushed. TELUS has just been this wild outperformer even against the S&P. And when you look at how foundational the growth rate is on it, you can really see that considering there's only like maybe 3 to 5 major telecoms, 3 to 5 major banks, like one major tech company realistically, like there's not a lot of places for that money to go from just a consumer standpoint. So like if you just go look at TELUS earnings and just look at the user growth base, like that consistency will continue to come in just by the amount of, again, population growth, right? So it's just such an easy metric to understand. And just, I don't see how the fundamentals for growth and just income get easier than that. Like there's not many bets you can make out there where you know for sure that their revenues can just triple or double, right? Which again, in the US, when AT&T is like max capacity, like what are they going to do for growth? So they're just, their population isn't growing on a percentage weighting that much versus the population. So it's just hard to see how they're going to move forward. Whereas with Canada, they don't have to do anything else. They just have to sit here, continue to expand the basic business, and they print. There's no competition. There's no
Yeah,
like,
that's a you made I mean that's a really good point. If you just compare like life is just hard all around right now because 7% inflation, you leave your money in the bank, you're losing 7% right there. But and then you're saying, growth stocks have been getting clobbered. Growth stocks would help you beat the inflation, but they're down too. Okay. well, we could go to our value, our blue chips, right? No, because at best, if you have Coca-Cola or something and they're stagnant, maybe you're getting a 3% dividend and you're still losing to inflation, which I guess, is that your best option still? Like you're losing no matter what, it seems like. But I've
On
seen that.
Yeah, I think people, when it comes to the investing side, I think this is where the due diligence has to be done because you can't base that return off a year. And I think it's the mistake most people will make when they're investing is they're like, oh crap, well, I started buying last year and I'm down massively. Well, you're making the right investments and your cost averaging historically give it 3 to 5, right? And you should see a much outpaced return when the markets come back with a vengeance because you're buying something that you believe still has incredible growth capabilities. Like it's allowing the fundamentals to catch up. So this is where we're seeing the overselling of stocks and now people buying these dips up, right? So it's hard to say. You can't say you're beating inflation in 1 year because there's just no way to base an investment off a single year of what the stock price does. I think that's a little too short term and you're kind of missing out on the real idea of return. I mean, that's the thing we were arguing about with Bitcoin, right? Everyone's like, oh, well, I thought Bitcoin was supposed to be an inflation hedge. I thought it was supposed to be a security against the market. It's like, well, are you just looking at this year? Because if you scale out to the last 5 years, it still technically is, right? Like it's still a massive growth thing. It's just, sorry, just a little anecdote so people don't feel so bad. I mean, you're kind of just grilling them into the ground.
Right. No, that's true. I mean, no, it is true. I mean, obviously always keeping a long-term perspective, but just with how accustomed people have gotten to, huge gains, like it's definitely been a rough start to 2022, I think, because a lot of people have short-term mindset, unfortunately.
How,
Um,
how long have you been in the market for?
So this is like I've been probably like 4 years, and then I really got serious 3 years. No, four years ago, I would say, is when I just like I always was interested before that, but that's when I got out of college and just like actually had money from a real job and just read all the books and started watching like a ton of financial YouTube channels, and that's really how I learned everything. A lot of your channel and Matt's, of course.
Yeah, you're getting, yeah, because that's the hardest thing, right? When your first year, because I mean, in my first year of investing, my portfolio dropped 40%. I didn't like to make people feel better. I wasn't one of those lucky people that just caught the bottom of March 2020 or anything, or I wasn't even buying necessarily appropriate stocks back then, and I was trading and stuff. And it's just
What year
like,
was that?
oh God, 7 years ago was maybe what when I got investing 2013, 2014
Okay.
time frame. And yeah, it was, I think that's about yeah, maybe about there. Yeah. So basically, yeah, back then, anyways, I just, it was so weird because my perspective on the market was really ignorant and dumb. And I just feel like a lot of people are going through that right now because they got jealous of the people that caught the real dip, made a fortune that got them into it. And now they're down thinking this is dumb. And it's just like, yeah, but I didn't make a dime on investing for like easy a year or two, year and 3 months. And then by then it was still just starting to go up, right? So people got to take a breath and realize that like these things are, macro events, and
Right.
you're long enough that you should probably get accustomed to the idea of it. I think if you were in 2018, you started feeling the vibes of like interest going up, Trump causing problems with China, and you started feeling like dips in the market. So I mean, I think that anybody that's been around since that long is used to this kind of stuff. But unless you've experienced these kind of volatile moments, I don't think people know how to emotionally manage it very well. So I mean, at least you're OG. You're getting some time.
Right. Yeah. Yeah. Putting in my time, trying to be up there with the meat Kevins, not paper handing though. You mentioned Shopify as one of the Canadian stocks. That's a great company. I got to get around to like really doing a deep dive on it because I mean there's just so many great companies. Can't get to them all. But would you buy that one? What do you think about it?
I have a hard time buying it at the current price because unfortunately it's still over. Excuse me, man. I'm talking all day here, throat's dying out. But yeah, it's just it's the hardest thing, man. Because BABA is like an easy 2 seconds, and I can understand the value to buy it. Problem with Shopify is it's like one of those things where if I was really young, I'd have no problem paying this price for it. It's just a matter of if it wasn't so expensive. The fundamental business is insane. I would rather own it than Amazon at the current price. But again, the problem is just I can't get behind the valuations until it drops probably closer to like 300 or 400. And a lot of shareholders probably going to hate that. It might never happen. But I mean, the company is so integrated in the e-commerce sector to a level that is only second to Amazon in the Western world. So, and they have a much different base than Amazon does because their margins are way freaking higher. It's all subscription model based off a SaaS business, right? Like subscription as a service, your software as a service. And basically they're getting into Amazon's business now where they want to offer 2-day shipping. And when you look at the basic like idea of getting into warehousing with the partnerships they have at scale of like, they just partnered with Saputo, if you're big into the Canadian market, Saputo is this massive cheese company. I followed it for years, so I'm like, that's incredible. So if they can find a way into the U.S. and partner with these companies that want to do drop shipping and take some of the shipping and management out of their hands, I mean, there's no reason they can't like really quickly double the business they have. And then you're talking about that they've got great partnerships and integrations with TikTok that just happened. Like they're so well integrated. I like them more than Square or Block. I like them because I use them too, right? Like I've been around using them for years now, and they've made it so anybody can have a retail store online. So the only exposure I have to them is through Riocan, because Riocan owns the office building that is their head office. So I'm like, man, a lot of fun ways to own these companies. But yeah, I don't know. If you want a position like Tesla, maybe you should just bite the bullet, start a position, see what happens. But if it ever comes into a sweet spot, or maybe I'll pay a premium above that. But if it could drop and we just get one bad earnings or something, I'd be on it. But it's expensive.
Right,
Chunk.
right. Yeah, and that's true. It's interesting, like you said, you get exposure through Riocan. A lot of the times, you probably are better off, focusing on the companies that are benefiting. Riocan's benefiting because they have Shopify as a, great client, instead of, going for the most hyped up stocks. Pick ones that benefit either way. But I do like Shopify too. I got to look more into it. So we talked a little about Canadian real estate, and you're around the Toronto area, and it's, is that like a very up and coming market? Is it what, like, I'm just trying to figure out what's the appeal? Is it like a New York City kind of thing?
The appeal is that unless you live in the market, it's hard to understand what's going on. Obviously, Toronto is one of the hottest markets in the world. It's in the top five fastest, I think by percentage growth rate, it is the fastest place of growing real estate right now. The problem with this specific area is it's landlocked with greenbelt laws, and that's something that most people don't understand. They don't even know what that is. But basically, the surrounding areas, even where I live, you're only allowed to develop in certain areas. And what happens is they've developed out as far as they can go, and all they can do right now is build condos up. And even where I live, and I'm an hour and a half out of the city, the law on the greenbelt is basically you can sever 1 acre for every 65 acres. So like you have to have a lot of land just to sever one piece off to make another property. Because if you could do that, I mean, every farm out here would be worth like 10 times their current value just for the development aspect of it. So that alone is what's really helped driven the market up. And then you take into the idea that we've been talking about is a population, right? Like all these people are coming in and they are not moving out to Manitoba, they're not moving out to like Newfoundland or all of these other places where real estate's cheap. They're moving into the hottest markets, right? So, I mean, you have just all these combining factors coming into play with low volume, low or high volume, or sorry, high demand, low volume. And it's just leading to these price appreciations that are something I've never seen in my life. I mean, we're talking about go back 3 years, you could have bought a home where I live for 400,000 or 500,000, and now you're looking at 1.2, 1.3 mil, let alone Toronto, where you're paying, upwards of 1.9, 2.5, and that doesn't even get you like 3 bedrooms. Like condos are at 900,000 a mil for like a bed or two, maybe 800 square feet if you're lucky. So it's just it's become a bit of a shit show. So I'm probably going to be more inclined to rent. I'd love to own a place like we were talking, right? But this is why I love REITs. Unfortunately, I don't think REITs are true exposure to the real estate market because you're getting the risk exposure from the stock market. But at the same time, you can get discounted value to that real estate. Whether it comes into like the valuation, nobody really knows. But either way, like you were saying, like Riocan gives you exposure to so many huge large cap companies, some of the best real estate in Toronto that arguably I think one of their properties alone has the value to be worth $1 billion at some point. I mean, frig, they're building like these vertically, they're basically like building cities in the sky now. Upper part retail with a little bit of office, malls below. And
Makes
look at like
sense.
smart
Yeah.
centers, man. Smart centers, I think 50% of their tenant basis is Walmart. I'm like, Walmart pays shit and is overvalued. So why not just own the company that Walmart's paying and make like a 6% yield? Like
Right.
easy money, right? But
Yeah. That's a good point. Kind of getting back to, we talked a little about inflation. Like, what stocks do you think would be the good long-term bets here, or just, to get past those inflation stuff? And, some of the things I've been thinking about is just like focusing on these companies with pricing power. We talked about, Tesla earlier. I mean, even things like, Netflix. Are people going to get rid of Netflix? They've raised their prices 4 times since 2014, and they've managed to grow all the way through. Amazon just increased the Prime membership costs. Tesla's obviously increasing their car prices. Like, what companies would you look to? I feel like that pricing power, Apple obviously is going to be a big key.
Yeah, some of the big tech players just for kind of surviving a lot of the pandemic. I thought about that too, because a lot of people talk about like negative inflation, where basically they get this pricing power, but then obviously as the market shifts and things become cheaper again, will it drag the prices down? Arguably, with things like Microsoft, I don't see it. Netflix, I don't see it. Those are the kind of companies that can price that in and never reduce it into the future. But for if I was like brand new to the market, no idea what I was doing, for me, again, not financial advice, the only two companies that I would be like loading the freaking boat on if I didn't have exposure would be Baba and Facebook. Facebook, I think, can be slowing down for these few quarters while we kind of get through this aftermath of the pandemic growth. But I mean, it's just the valuations on them, considering Facebook arguably has the best margin balance sheet on the S&P top 10 still, trading at what, like a 14, 15 PE. I mean, it's so, same with Babel, like they're so priced properly to the downside that I don't see how you lose money in them over the next 3 to 5 years. Like they're easily kind of double up your money in like a 3 to 5 year time frame. In my opinion, when you're talking about the pricing power side of things, I'm man, it's so hard, right? Because like I feel like those companies are still like crazy valued, so they'll be fine through this. They might be able to keep some of that pricing, like our market cap value that they have, because of their capability to keep generating high amounts of revenue. But like I'm really looking at like those longevity stocks for income that might get hit like Clorox did, right? Like Clorox got wrecked on their margins because of they're just putting the products together, and that's the opportunity, right? Because we know this is going to pass. Like this shit's not going to last. So the company has the money to like survive this and just kind of get the supply chain figured out over the next year or two. Like you have the capability of locking in. I think again, we're not talking like Tesla kind of returns, but at the same time, if you're a guy like me that wants that cash flow and security outside of growth, I mean, right now I'm keeping an eye on things like Procter and Gamble, things like McDonald's, and just hoping to God that they go through like a real big pricing crunch, like Unilever has, like a lot of these consumer stapled and discretionary companies have. So that's what I'm hoping, because I like constantly buying the mixture of growth and dividend income stocks. And I'm kind of annoyed because every time McDonald's has dipped, I've never bought it, and every time it's just gone up, and I'm like, just a little further down. Like, come on,
Yeah, you
Procter
can.
and Gamble, give me a 3%
Yeah,
yield, and I'm gonna load the boat.
those
Like,
and Pepsi too. You can never get
yeah,
like the really great dividend stocks at a great price. You're either going for like the little riskier, like dividend growth. I mean, AbbVie's been making a killing, but like
yeah.
Starbucks, it kind of got killed, and now they've got the union stuff going on. But going back
Sector
to what you.
wise, sector wise though, man, I really think this year, whether people, we'll see if it plays out, but historically, if we follow the same trend as last time, we'll probably have a year or two for energy, healthcare, and basically we'll see if tech comes back, because like I said, it's still relative. A lot of them are cheap, like Facebook, whatever. But yeah, so I mean, the big and materials, right? Like usually some of these sectors just crush when you're talking about like commodities, energy sectors, and healthcare right now. I feel like healthcare still has a lot of room to bump up because it kind of got price appreciated to the downside when I don't think it deserved it. So I mean, those are a few sectors that I think are going to do great this year, because like they're all printing, right? So
And
we'll
those
see.
are all the sectors. This is what I love with this VYM play. You know, um,
Easiest
it
way to do it.
has 6% technology exposure, and the rest is everything you said. Energy, healthcare,
Financials too, right?
financials. Yep, a
Yeah,
lot
like
of I think about 22% is financials. So that's the way I see it. Is keep everything I have. I'm obviously not going to sell anything, and I'm buying that instead of that way I'm good either way, because the majority of my money is in my high conviction plays, and VYM is almost like, the way I see it, is a little bet that no matter what happens in the market, it's going to do well. Is the way I see it, at least
yeah. Yeah, VYM is such a great
in the
exposure
short
for
term, at
that.
least.
But I don't know if everyone should be buying it, because me and you talked about this before too. The only reason I bought it is I want that exposure to those Home Depot, all those healthcare companies. They're pretty much all stocks I'd love to own at some point. So why not own the ones that are overvalued and undervalued in a basket? Because like you were saying, that like people don't realize how under diversified they are if they're buying tech stocks like Tesla, Apple,
I
and
did.
index funds. Because you get those VOO, like you said, is what, 25%, those top
Right.
10 companies, and QQQ is like 50%, those top
Mhm.
10 companies,
And
maybe
then if
add in
you own
those.
them individually too, like, you're all at the top, which
And sadly, they're all overvalued, right? Like I own a lot of like Apple, Microsoft, two of the largest positions in my portfolio, and I'm still more bearish than I am bullish on their valuations. They skipped out on guidance. Every company that posted guidance tanked. If they can survive Q1, then by all means they've done it. But I still really feel like they're going to miss on something for Q1. Markets are going to be like, oh shit, Apple's finally getting hit. They can't hide it. They have to admit it. And then maybe we see like another 5-10% downside, because everybody knows they're far expensive. So what can trigger that? Okay, let's get these hedge funds moving into some other companies that might be more valued. So I'm very skeptical. But again, this is coming from somebody that owns this stuff. I don't think, maybe a lot of people watching this maybe have like 10K in their portfolio or something. But when you get to scale, it's like you kind of have to, like you, I'm not selling out of the market. I'm not pulling a Meet Kevin, right? But at the same time, like I got to be careful, because at the end of the day, it's valuation that you're paying, right? And what you pay today is going to dictate the return in the future. So I think most people might be blindly buying them, but I don't want that risk, right? So I feel like if I'm adding new money, it's going to go somewhere cheap, and that's like BABA, those things where I can hopefully get an immediate return off of it in a sooner time period. So yeah, Apple I'd be a little more skeptical of, but we'll see.
Yeah, and it's like you said, I already have all these positions built to the scale I want them at, and that's the only reason. Yeah, like that, I do want to reiterate, that's the only reason I'm buying VYM. If I was just starting out investing, I mean, if knowing what I know now, like I would be going all in on, obviously not all in, but I'd be buying the S&P and the, Tesla and stuff like that. Like I wouldn't be worrying about VYM. But yeah, it's like you said, like I'm not selling anything, but I'm instead buying VYM. That's like the way I see it. And like you said, these Q1 earnings calls I think are going to be crucial. I think you're right. And that would kind of get us to what, April, May. I feel like that's when they were saying, the double bottom might hit. And I think beyond that, hopefully, things are going to start to improve as far as like supply chain. And hopefully, I mean, who knows what'll happen. But yeah,
we're
we'll
still
have
in
to
a
get
Black Swan event here too, right? Like I think
Mhm.
people are under anticipating how fast something could turn tomorrow, just with the geopolitical stuff too. I mean that's scary as hell, right? Because if you ask anybody, oh, Putin's not going to invade Russia, and then they did exactly the opposite, right? I mean, there's a lot of stuff to still be highly
Yeah,
worried about in the market. It's
I
not
was
like we're
reading today, like it's really interesting, like talking about more potential Black Swan events is, 15% of the world's wheat comes from Ukraine and Russia.
yeah.
And the way it works basically is like the world is on a 90-day food supply that they have enough to last 90 days. So once you stop making the new food, if they can't get this wheat, the farmers aren't planting it, they're not exporting it, the U.S. or the whole world within 90 days, like is out of that food that they, it takes that long to produce, and how it's really going to impact obviously like more developing nations harder. But that's just the type of stuff, the unknown unknowns that are going to be the result of what's going on right now. And like who knows, like the next few months we'll see what happens. Obviously there's no way to know for sure, but it definitely there's a lot to like think about. And even stuff like nitrogen and phosphorus and like ammonia, I think is used in fertilizers. So like Scotch Miracle Grow, another one up there with Clorox that I'd be like, all right, it's a dividend, safer play, but no one's safe. Like that one is getting killed too. Fertilizer is 5 times as expensive now, I was reading. So yeah, who knows where we're going from here.
Yeah, man, there's one thing you can learn from this that I think is so prevalent is the amount of education. Because I mean, like, I couldn't tell you one place in geography of the Ukraine, and you don't even realize how much Russia's economy is intertwined globally with a lot of these commodities and other aspects. So it's going to be a good learning curve for a lot of people, just to see how all the different markets work, and because that's what happens when these events take place, right? It's you go back to going through that checklist of, did I screw up? Or is this, and then you start going through all your investments, you start figuring out what's going on globally. But yeah, I wouldn't like trade or try and like predict what the market's going to do off this. You just, if you're buying, you're buying, and just don't worry about it and hope the companies that you own are great. But there's nothing saying that Putin doesn't offer, some kind of chemical warfare. One person steps too far, this becomes a globalized war rather than just an independent war. Like nobody wants that. I don't think Putin wants that, but you don't know, right? Like it's
Right.
just one bad news event tomorrow and the markets are down another 10 or 20% for whatever God knows reason. Or like you said, right? All of a sudden, 3 months from now, they're having trouble with the wheat supplies and all these other food markets. Like Russia right now, they can't get sugar and stuff. So I think they were showing like these malls in Russia where people were competing for it because of these global problems and the sanctions and stuff. So it's just like, man, like you don't know. Like you don't know.
Yeah.
So
I
it's
think there was like a tweet or something I saw about Russians are about to be the healthiest people on the planet. No Netflix, no sugar, no McDonald's. It's all been no iPhones. Like, but yeah, who knows where we go from here.
It's wild, man. Needless to say, the markets are never boring, that's for sure. But I kind
That
of
is
missed
true.
there was just that grace period between the midst of after, like in between that pandemic, man, the market just went in that grace period where everybody was on cloud nine. It's like we had like a good year and a half where things were just the gravy train and everybody was just lolly-dolling around, like loving life. And now everyone's shitting their pants. So not everyone's questioning their investments. They're all going ETFs now. And then, oh my God, we get like a 1 week bull rally. And then all of a sudden people forget there's a war. Gold drops again. And it's just like, I love
It is wild.
it's definitely
A wild
interesting.
ride.
Yeah, man. So, yeah, what else is going on out there though, man? We can talk Tesla a little bit here. I mean, the Tesla
Always down to
IPO.
talk Tesla, but that's up to you. We could do, what are you feeling?
Yeah, I don't know, man. Tesla's been a fun one just because of all the recent announcements. So we see that stock flying up, which is really cool with the Berlin factory.
Yeah.
Question is, do you think they're going to get to their goal of 20 million cars a year by 2030? I mean, that's an ambitious goal, man.
So it is an ambitious goal. Obviously, they always set the bar real high, and some people call it overly optimistic. The way I see it is, I was reading a thread the other day about this. To have motivation and to keep going, you need a crazy big goal because once you hit your goal, then you relax and you become complacent. So I
Yeah.
think that the fact they have that huge goal of 20 million cars, it doesn't matter if they get there or not. The fact is, it'll make them get a lot further than they would have otherwise. Because I did notice when Elon was talking at the Giga Berlin yesterday when he gave the speech, I think he did say that they're shooting for 10 million now, and they were like, it's aggressive, but it's doable. And it's crazy because I was literally like reading through the what's it called, like the long-term report for Tesla that came out 10 years ago, and that was their goal, 20 million by 2030. I think it's still possible, but I could definitely see 10 million being more realistic. And I've run the numbers on it. Like, this is what blows my mind is nothing else changes, right? Nothing changes with AI, full self-driving, the solar. Like, these are all industries in and of themselves that could blow up and give Tesla another trillion market cap. But even if none of that ever happens, for the naysayers, Tesla at the current rate, like their production, the amount of cars they're selling is scaling so fast. If they were to do 10 million by 2030, which I think is very possible, then they're going to bring in 400 billion in revenue, and 40% of that, or 30% probably, will be gross profit. I mean, we're talking about 150 billion in gross profit margin, just the automotive, just selling the cars that they already are.
Yeah, but that's like the big problem with that too is when you kind of roll back to like the car sales alone, because then a lot of people keep saying, well, if these car companies are trading at much lower valuation metrics, right? Because we're not talking about the tech side of it. I mean, you're seeing GM, like a lot of these other automakers trading between like the single digit PEs and stuff like that. And they're like, well, we're just going to price it off the auto business, then the PE ratio needs to be a lot lower. Because that's the scary
That's
thing,
true.
right? Like you're almost gambling on that future, but I love it. I think the only thing that I'm betting on with Tesla that so many people underlooked when it came to Apple, came to Nike. It's just like, to be honest, at this point, if they can just do what they're doing as good as they're doing it, it's the branding power that you're paying for with the CEO that is only comparable to Steve Jobs. And I don't know why the guy gets so much disrespect and so much hate from people. But then again, Steve Jobs didn't. Steve Jobs is much more of an asshole from everybody that knew
That's
the guy,
true. It would
right?
be very interesting too if Steve Jobs was around today, if he would be so celebrated. He probably
He,
acted just like Elon did.
the guy
Or does.
he'd be the richest man in the world right now if he was still alive. I think his net worth would be something like $500 billion or something like that with the
Wow.
ownerships that he had in the stock. But yeah, man, I think people so underappreciate the value of that branding. They're a kind of company that can drop a limited anything, sell out in a minute, and bank like any amount of money they want. They have no problem raising any capital at the drop of a dime. It's for as long as they plan on getting to Mars. Like their Mars plan is by like getting people there by like 2028. I think they're doing a Mars mission in 2026 or something, which is pretty ambitious. But like all of that stuff, that branding power just reiterates the insanity, right? It reminds me of how big basketball was with Air Jordans and that stuff. Like when that had the world's captivation and it inspired a whole generation. And like you said, nobody cares about Ferraris. Nobody cares about Lambos or Audis. Maybe a car enthusiast that's in his mid 30s or
Right.
boomer
And the
are
younger
like, oh, well, why would
generations.
anyone
Yeah.
want electric? Like the motor and all this. It's like, yeah, who cares? The only thing that matters is the next generation that's going to be buying these products when they get their licenses, right? And not one of them gives a flying F unless they're real car enthusiasts about Rolls Royce or any of that. The
Which is
true
a
love
definitely
crazy
a
Tesla.
it's definitely a niche and it's a shrinking one. And yeah, you ask any younger, kid these days or 20-year-old, like they all want Teslas. Like it's actually insane, no one wants a Corvette. They don't care about that stuff.
Yeah, and I don't know how you put a value on that, but if Nike and Apple have anything to say about it, they could come up with any product under the sun. So long as their fundamental product remains good, being the car, they could literally do anything from here. And the fact that they got energy storage, robotics, it's just
Yeah.
like basically just buy it for the branding and what they're doing with the vehicle and presume you're gambling in the future with anything else. And you just need one of those. One
Yeah.
of those to work out, you're in another multi-trillion-dollar market capped industry, and they could own like 10% of it in the US and just be printing money, right? So I mean, that's where people come up with the absurd like $5-10 trillion valuations on that company. But again, it's a lot of speculation. I think people should recognize it for that gamble, and they should buy it as a gamble, not as like a fundamental investment. But if you're going to gamble on something, highest degree of certainty of getting a return in the future, it's got to be Tesla. I don't know any other company that I'd bet on that could scale into that kind of branding. I mean, Elon's awesome, right? I mean, I love the guy. I want to get that photo. I have a meme of him where he's got the what was it, the Bitcoin. He looks like he's a monk and he's holding the Doge
Oh
dog.
yeah,
It's
yeah.
got Mars in the background. I really want to get that framed. I mean,
Yeah, I mean, and that's the other thing. The guy has the most dank memes. How could you not like him? And that'll add some value to
he's
Tesla.
actually a good guy. That's the crazy part, man.
Mhm.
It's like he's not an asshole, and like nobody like talks unrespectfully about the guy, and he has no filter, which just makes it even more brilliant.
Which, yeah, I mean, there's a whole other thing we could get into, but I think it's necessary to just have someone who's not just part of this just like everyone telling you what to think and just no one objecting to anything. Like I think it's good whether you believe in what he's saying or not, and him being so controversial all the time. We need someone, or hopefully like a group of people who are just like, I think that's better for society to have like an actual like discourse back and forth.
He proves he is the exemplifier, like the symbol for why we need billionaires and why you shouldn't like try and just under like demean the rich and feel like they don't pay taxes or anything. It's just like I don't think I would ever end up in a position like that guy. I don't aspire to change industries. Like I'm not aspiring to multi-billion. Like I don't want to deal with the stress that guy's been through. He's lost like 3 wives, got like tons of children, no stability in his personal life. But if it wasn't for someone like that, there would be no talk of going to Mars. There would be no like, a changing there. If it was literally not for Tesla, do you think we'd even be talking about electric vehicles right now and GM and Ford shifting into the
Right.
electric? Like,
And
would that even be a conversation? Would that catalyst existed without them after GM crushed it in like, what was it, the 90s when they first came out with a commercial electric
yeah,
vehicle?
there was a great documentary on it. I just watched recently. It's called "Who Killed the Electric Car?" Early 2000s. Mary Barra, GM, they actually led. They had the first electric car. Everyone loved it, and they forcibly, took them all back, destroyed them because they knew what was going to happen. It was going to cannibalize, the oil business.
Yeah, that and repairs, right? Like, I mean, most of their
And
money is
yeah.
going on repairs, oil changes, all that jazz. And actually, the CEO at the time literally stated recently that his biggest regret of ever running GM was canceling the electric vehicle. Like, if they could have just rode through that, like back then, I don't think the margins were as good. It was a little bit more complicated. They were more
Yeah.
about income, revenue, dividends, and then they went bankrupt in 2008. Right, so it really showed how bad that
The
business model
short-term
was.
thinking, the disease
Yeah,
of like Wall Street,
I
quarter
think
to
they were one of the
quarter, quarterly.
biggest bankruptcies in history, man. Like I don't, and people still act like it's a great company, and I laugh. I'm like, go back through their entire history, and the only time they were great was when they were the largest company in the U.S., which I think was from like something before the 1980s, when they like just huge dominated autos were the big thing. But
I think that I think there's a higher probability that GM and the legacies go bankrupt than it is Tesla becomes the biggest company in the world. And if they were to go bankrupt, I mean Tesla would have no competition then,
biggest
And
fear, man. This is everybody that I hear is bullish on Ford or GM. The biggest bear statement for those companies that people don't understand is they are 100% reliant on internal combustion engines to get them to the electrified future because they can't afford to do this transition like Tesla did overnight. It takes a very long and costly time, and they already have a crazy amount of debt. And like the CEOs have said that we need the sales from this, and now you're going into a period where like I mean, basically, it's just the cars right now are great. It's such a stupid problem. You can't get vehicles, so they can't manufacturing to scale the selling aspect of them. So vehicles are selling for more, so they are getting a little bit more margin, but revenues are dying. And then meanwhile, we're going to come out on the other side of this, maybe in the next 2 to 5 years, where vehicles are already going to be selling off, and nobody's going to want to buy an internal combustion engine because they know in 5 or 10 years of them owning it, it won't even have resale value. Like you won't even be able to trade it in for value because there won't be any demand for them. Everybody's going to want the electric vehicles, right? So there's going to be this period in time where I think you're going to see a huge sell-off, and the demand for internal combustion engines is just going to fall off a cliff, like the used vehicle market. Like people are just going to be like, why would I want this when for the same price I can get an electric vehicle? Like I'm not going to so if you're buying an internal combustion engine car today, at full price, I think the likelihood of it having any value in 5 years is going to be very, very slim. And if they don't do, it's like kind of a ballet right now for them. If they don't do this transition correctly, they're going to their stocks are just going to get wrecked because they're going to lose all their margins, and like their whole consumer demand is going to shrink because Tesla and these other EV companies are, taking the demand right now because they're first to market. Like I like things like Polestar, I think are very intriguing because any car company right now that is actually making an affordable electric vehicle,
and they're selling a good amount. Yep.
Yeah, at production level, because Teslas are expensive, but if you can come out with something cheaper that maybe doesn't go as far and the battery's a little smaller, yes, somebody might pay 20 or 30 grand for that, right? So they could easily just slip in and steal demand.
I think Tesla, if anyone's going to be the first one to do a 20 or 30 grand car, though, it's going to be Tesla.
Maybe we'll see. Polestar's got some big ambitions.
Yeah,
I mean, in China, they're already doing it, right? Like China's already making really cheap $20,000 electric vehicles that are just for driving around.
Yeah, but those, I feel like it's like, a bathtub on wheels that like wouldn't get in the US would never get approved, like it wouldn't be safe enough. And also just like for the style of driving there.
Well, I think you're degrading their car companies a little too much. Considering
well, no, I'm not saying, no, I'm just saying the car, like specifically what you're talking about, like the ones that are great over there that will give Tesla a run for their money are on price parity with Tesla or are more expensive.
Yeah, I don't think, for sure.
Yeah, that's all I meant. Like, they are making great cars, obviously. Sandy Munro thinks that China, if anyone, will be the one to give Tesla a run for their money. But if China is giving Tesla a run for their money, if they're already better than Tesla, every other American, car company is going to be 10 times more obsolete. They'll be long gone. Yeah. But there was definitely a lot to unpack from what you said there. But just getting back to like, Tesla's stock and the company, we have to remember two different things. And I feel like depending how the next few months go with like, if it gets worse or it gets better, if either way, Tesla will be fine. If we have a recession, who's that really going to hurt? It'll hurt the legacy companies that are saddled with debt. And also when you factor in these rate increases, I mean, GM has like 100 billion. I got to double check. It's a lot of billions in debt, so how are they going to, pay that down with the rising rate while they're trying to, start this unprofitable EV business, and their cars keep catching on fire to top it all off. Like GM's really having the worst day. Ford, I think might be all right, the way things are right now. But, just looking forward, like, so even if Tesla's PE did start to come down, I mean, they're on track right now, depending how this 2022 goes. If they grow again, I mean, their PE ratio, it's come down so much. I mean, it was like 180, I think, last year, and it could probably get to 60 by next year.
Yeah, and I think the other big falter too is like the tech side of the industry, because basically there's this technology on wheels, and when you look at the tech that's coming out with what like Ford even has on the road, even though they're making great vehicles, I feel like they're servicing a certain market that they've already kind of captured, and I don't know from a valuation and just a value metric, when you have Google working with self-driving, Tesla on the cusp of self-driving, like if you get a handful of companies that own that tech and are able to enable it to their consumers, which is something that Waymo doesn't do, that's something Tesla does. But I mean, if you can capture that, like I don't even see the point in why anybody would even consider buying a lower tech-based vehicle, because it's like people buying an iPhone versus Samsung. Everybody that uses Android knows that Apple has a way better system. I mean, did you look at like the last Microsoft Windows upgrade? They basically just copied the entire layout of Apple like Macs. Like I just laughed so hard. Like clearly
that's
Apple
what they have always done historically.
Yeah, so
like
I mean,
Microsoft
it's clear from a user
user
experience, man, technology wise. Like you look at how like Apple dominates that in the phone market, and if Tesla does that, or another, like you get even just a technology company that does that, whatever vehicle manufacturer owns that tech, like I don't see why they don't completely dissolve the rest of the market. Because again, look at Hertz, right? Like getting involved with Tesla. Like if self-driving becomes a thing and they can adopt it, why would they even waste their time thinking about GM for any of these other companies? There's just no point. And then they just start, then you see the mass scale explosion, right? Because now everyone can turn this into another business. You see the big, like all these car companies, these valet services, they're just going to use Teslas or
And I
whatever other
think
company.
on top of all that, just if you just look at the trends, I mean, what are the biggest trends now? It's like sustainability, ESG, innovation, and Tesla hits all those. And the other
Yeah.
thing I think that's really interesting, and I don't know if it's the first time ever, but obviously one of very few companies that have been in this situation. Tesla's basically, the way I see it, is what ARK Invest wants to be, wants to invest in. Tesla is the innovation ETF in and of itself,
Yeah.
And for the first time ever, you're not just investing in one startup that it's a great idea, but getting to scale is what bankrupts the companies. Not only is it not that, it's 10 startups that actually are from a profitable business because they have these huge profit margins coming in from the vehicles that are light years ahead of everyone. So I just see like it continuing to succeed, and you just company in all the trends. It's just wild to think about. It makes me start to think that Stephen Mark Ryan solving the money problems, price targets are not as insane as they might seem. If you're looking 10 years out.
Yeah, that's just so funny that you mentioned that. Just thinking about it, I'm like, maybe if ARK could have concentrated like 30% of their portfolio in Tesla and stopped trimming it when it goes up, and then just pick 2 or 3 other companies they believe in, like Block or something, they'd probably be way better off. Because you feel like they're trying to do what you said, like they're basically wanting a portfolio like Tesla. So why not just make the vast majority of the portfolio Tesla? Because I feel like they're trying to replicate the same idea onto all these other companies. But do they really
They're just
need all
not
those
doing
other
it as good.
companies?
Exactly.
It's
They
like,
yeah. And I know, like, they're limited with the allocations and whatnot, and they have to, abide by a whole other playing field. But yeah, when was ARK doing the best? When Tesla was number one, Square was up there, or Block number two, and now, yeah, these stocks are shooting up, and they don't have the same exposure that they used to, and that's why ARK is, not been doing as well
yeah,
as it used to.
from growth man out of her portfolio, like I'd easily make a growth portfolio with like Coinbase, Tesla. Like Coinbase is probably it's such a weird stock to me. Do you ever look at it? It has more free
I gotta
cash flow
look
than
into it.
you got to look at it. I like the inside of me needs to listen to an earnings call because like every valuation metric on that company is a screaming buy to me, and the only risk that you're getting is crypto. But if you're bullish on even Bitcoin or crypto in general, like how do you not buy it? It's got a PE I think of like the low teens. It has more free cash flow than the New York Stock Exchange, trades at a lower valuation, and the growth rate on it is astronomical for what you're paying. I'm like it's just so nuts to me. I just look at it every time and I'm like, why am I not buying this? I'm like, I own Bitcoin, but should I own a bit of Coinbase as well, or should I just?
Yeah,
I
I
don't
own,
get it. It's nuts.
Voyager Digital.
Yeah, that's another interesting one
So
too.
it is interesting, and I want to. I got to look into Coinbase and do like a deep dive because I want to really compare the two. But the way I see it right now, I feel like Coinbase is like the clear, winner right now. They're number one. Voyager is more of a gamble for me, but I use the Voyager platform. It's where I own my crypto, and I love it. I think it's great. I think they have a great CEO. So if multiple people can make it, like I'm rooting for Voyager, but Coinbase is a very interesting one too, and that's down so much. I mean, what did it get up to
Yeah.
450? With the hype and the craze, and now it's probably looking like a much better valuation to start a position.
That's how you got to print these markets, man. For the newer investors, it's just like you need to just dig through, just don't have like a one set strategy and just purely look for companies like that like, yeah, they have risk to them from regulation standpoints, from like other asset risk standpoints, but to build a diverse portfolio and looking at companies like that, man, like you could just double or triple up on stuff like that in no time. I feel like if you're very like honestly, yeah, if I had to add a stock that I try not to tell people to buy those kind of companies because I'm very conservative these days. Like the risk I take on is large cap. Like look at my biggest bets. Largest companies in the S&P top 10, largest companies on the TSX Venture Exchange, the TSX S&P here in Canada, the largest companies on the Chinese Shanghai Exchange. Like I do very well because I don't want that kind of risk. Like I really only play in the realm of large cap, so I never try and promote like these real. But man, oh man, it's hard to like overlook those guys, because man, their market caps are so small for newer investors. Like if you had 10 grand, like that's the thing, right? Like I don't want to play in the world anymore of doubling up overnight.
Yeah, no,
I'm too
I
scared. I want
understand.
preservation, but like for newer investors, man, playing around with small caps right now is a freaking dream. Like you can find $1 to $50 billion sized companies at really great values, and those have a way higher likelihood, like Shopify, right? Even though it's a really big company, I mean, it could easily, it's at what, 90, 100 billion. Like that thing in 10 years probably would have no problem becoming a 2 or 300, $400 trillion, right? Whereas Apple, like, do you really think Apple can go from 2.5 trillion to even 5 trillion in the next 3 to 5 years? I mean, it's a stretch to imagine, right? But for Coinbase, like Jesus, they could 10x from here in the next 5 or 10 years, and it would be nothing. It would be like a blimp on the radar for them. But yeah, I don't know, man. What about you? Are you still like into some of the riskier small caps things like Palantir? Like I like those companies, but in my head, I'm like, if it's not big, or if it's not trading in these large market caps, I don't really waste my time as much.
Yeah, I actually, so all those, I agree with like what you said. I'm kind of past that point. I own them, but it's just a very small part of my portfolio. My weightings go like Tesla's number one, then I own a lot of index funds, and the large caps, like you said, are my biggest positions. And then I just allocate like a few percentage points to the Palantirs. Although depending who you're talking to, people really feel like Palantir is going to be the next Tesla. I don't know it as well, and I don't have like that same level of conviction, but I could see it doing very well. But so yeah, that's one that I put in like my speculative bucket. Voyager, obviously, and maybe a couple others. Neo I have, and I'd have to look like maybe one or two more. But yeah, I mean, the more I think about it, the way my portfolio is set up, I think I invest like a venture capitalist, but that has backup plans. I have like 5 or 10 of these, but if they all, if the smaller speculative plays, didn't work out, I'd be fine because I have my index funds. I have some dividend, stocks to hold up the portfolio. And, I really just need to hit on one of them, which so far has obviously been Tesla. And yeah, I mean, Tesla went from, 10% to like 60%, and currently 65% after this rally, maybe more of my portfolio. But that's the thing, is every time I've tried to find a new company, at least thus far, I'm giving them a 5 to 10 year time horizon. But so far, all that money, I would have been better off just throwing back into Tesla. But we'll see. I think 5, 10 years from now, I do, believe in them, and just need a couple to work out.
Yeah, that's pretty interesting. Yeah, I don't even right now. I don't have any. I think Well, I do have some private placements, like really not even worth mentioning size, like investments in companies that are going public. Luckily, some ways I got into that through the job that I'm doing. But outside of that, there's one place where I think if you want to make, like, if you're one of those guys that wants 1,000x returns over the next 10 years, and you don't want to pay the premiums that you might be paying, say, for Tesla. I keep looking at it, and I deal with a lot of people in innovative healthcare right now. And over the weekend or last week, I'm dealing with a guy that's working on sarcoma, soft tissue cancer treatments. And he says what people don't realize about the healthcare space right now, he's like, from a guy that's in it, it really feels like the dot-com era, like the 1990s, and what happened with internet. Because he's just said, like, we never had the technology to fix these problems. And now, thanks to mRNA, I mean, you're watching people put pig hearts in humans. They're testing pig kidneys now into humans. And like, none of that was possible even 5 years ago without genomic editing and genome sequencing. So like, and this is the same thing with the psychedelic industry, right? Like I made a lot of money off that industry, and I'm thinking about circling back around to it, because if you can sit on your hands for 5 or 10 years, there's no major players in those industries. We're talking about multi-trillion-dollar, the largest drug segments that currently exist today that don't work. I mean, depression, anxiety, things that affect 1 in 2 people where they have nowhere to go. And now we're seeing pro hockey players start these businesses up, like Daniel Carcillo is a guy I've been working with from the Blackhawks, 2-time Stanley Cup winner, started a company called Wesana, which is now a big psychedelic company. And I'm just thinking that, like, when I was going through like Kathy Wood's ARC Genomic ETF, one that I sold, got in and out of, I might buy it back. I think my girlfriend still owns it. I really want, it's a whole level of risk that's like so far beyond any company, because obviously healthcare doesn't really make money in the pipeline aspect of development. But like, when you know that these drug segments are going to work, when you're talking about psychedelics, mRNA, like just cancer treatments, like to not have exposure kind of bothers me a little bit, because I figure if you could hold on to them for 10 years, like, it's in our lifetime, man, is the first time we're ever going to say there's going to be a cure to cancer. They've pretty much made a cure to like MS, like all these major diseases. They've pretty much cured AIDS. like, it's kind of mind boggling because if you went back to the 90s, they're like, no one's ever going to cure cancer. It's never going to happen. And like all these doctors I'm talking to are saying, if we go 20 years out from now, I bet the most barbaric thing someone's going to say is that we treated people with cancer with radiation. He's like, it's going to look so barbaric and effed up, just like the way they used to treat people in healthcare in the 1800s. So he's just like, when you hear the way these people are talking about the healthcare space, like I feel like an idiot that I don't have some exposure. So I'm really thinking about just maybe making like a really tiny percentage of buying maybe back up some of the psychedelic stocks and maybe the ARC Genomic ETF just as a pure lottery ticket, because this is the time for the next decade. If you have the risk tolerance, you can stomach that time horizon where you don't expect to make any money and it's basically a pure gamble. I mean, I really feel like it would just take one or two of those companies in an ETF to make you thousands of percent returns over the next 10 or 20 years. So, I mean, that's a real interesting one for me. I explore it a lot, but I haven't had the balls to start like
Yeah,
buying in.
that's no, that's a lot of good stuff. I mean, it's just crazy, getting back to what you said, with the pharmaceutical, historically for all these issues that are just, especially after the pandemic, skyrocketing between like ADHD, depression, anxiety, and we don't have a great way to treat these things. But, you read the anecdotal evidence, just even things like cannabis. And obviously, you've got mind medicine, you've got this whole new industry of psychedelic inspired medicines. And it really just makes you wonder, because now that it's finally legal, obviously, like we didn't know the last 50 years, and it really makes you wonder. But there's so much anecdotal evidence out there on people getting better effects from these other, alternative treatments. And I think it will be really interesting. And now, like, we're going to actually see pharmaceutical, scientific trials to actually prove it. And like you said, I mean, the psychedelic inspired medicine industry could blow up. That could be, yeah, $1 trillion industry.
What I think is going to happen is basically what I've seen this happen time and time again with a lot of the CBD companies, because they've been getting a little bit more attention and they've been using CBD to treat things like myocarditis, even people that got like the side effects, which is myocarditis is like a heart problem in young people. Some people are getting that side effect from the shots, and they were using CBD to treat it. And to put it in perspective, this is so nuanced. No large cap pharmaceutical company has exposure to these sectors. What usually happens is they let the smaller cap companies figure it out and take on the early day risk. And I've watched this happen with a few CBD companies over the last year. They usually trade between a $1 and $3 billion market cap for the ones that seem like they're really going to work. And then by the time they get to usually phase 3A, phase 3B trials, which are the last trials just proving phase 2B trials at a scaled level, by the time they get into that level, that's when you see the interest from these large cap pharmaceuticals that know that there's going to be huge potential. And then they come in and buy them out, usually for a $10 to $20 billion valuation. So what I figure is going to happen is we're going to see that just kind of escapade by the time they get through trials. Because right now, this isn't bullshit, right? Like the reason that this is advancing so much is because governments have started to recognize the value. And there's only one company in Canada right now that got emergency use authorization to distribute psilocybin to people that are in basically really debilitated situations like life and death cancer. And like that was a huge milestone step up for like, one company to get the government to give them a go ahead. Think about that. If you went back 10 years ago and said you should be giving somebody on their deathbed psilocybin, you'd like, what are you, nuts? We're going to give them a hallucinogenic drug. But now they're finding that it offers solace and it gets rid of the anxiety of death, apparently, even. So the government gave it an emergency use authorized. So it's like, so people are obviously seeing that these drugs do have some pretty profound effects in many different circumstances, right? So it's like a pretty easy bet from my understanding. Like if you can just sit on it, I don't see how you lose money when there's so much anecdotal evidence coming out of like a Harvard. Harvard did the initial studies on psilocybin and found it was great for quitting addiction. There was no side effects. You can't OD on the drug. This doctor's like, this is a miracle drug, because walk into any pharmacy and pick one drug up off the counter that's even legal to buy without prescription that doesn't kill you. So you can't even take Tylenol in large dose without dying. But you can take all the psilocybin in the world. You might freak out for a little bit, but you're not going to die. Like what? Like
It's crazy. Nuts. And I was just pulling up, so I'm looking over here is the mind medicine chart to see where their trials are at. And yeah, they've got a couple that are, at 2B right now, and the majority of the rest are in phase 2A. So they're getting pretty close. Who knows? Gets to 3A, you think we could see like a Johnson & Johnson buy out the company or something?
100%. Give it 3 to 5 years, because these trials take a very long time to get through. So I mean, because they've already done a lot of the preliminary work, which is great. So now they're getting into human trials. but they definitely need a good, 3 to 5. They need to work like, what phase 2 trials will probably take a year or two to prove out, and then you got to get into getting assurances to be able to scale it at phase 3. But if they can make it to phase 3, it's usually a pretty good sign, right? Because basically, so long as they can assure phase 1, 2A, and 2B or whatever, then you're pretty much in the green, because then it works. Like they do it with a small group of people. I don't know how many, maybe I'd have to look, but usually it's between like 15 maybe to 100 or something. And if it works, then they scale it to doing it on like thousands of people. And then if that works, they're like, okay, we know we can get through this. But they need time to see if there's side effects and what's the long term. We need a year just to see what the after effects were and what the fallout was. So it's a pretty lengthy process. But again, man, risk versus reward. That's the risk. The reward is $100 billion market cap on some of these drugs from where they sit today. Like, I mean, lottery ticket, right? Like turn 10,000 into $500,000.
That's another one that I would, I have in that small speculative percentage is my medicine. That's exactly how I look at these. It's a lottery ticket. But that's the thing is, I know the field will do well, but that's the problem is, so far with, the cannabis field, the field is thriving, but the companies are not, because there's too much competition and, obviously other issues. That's the tricky part. Even if we're right and the psychedelic medicines do, become a $1 trillion industry, we don't know if my medicine will be the leader. We'll have to see how it plays out. But,
like you said with Scott's Miracle Grow, man, like it's wild that how competitive the MJ space is. Like they wreck the whole market. Like there's just here in Canada, they let your grandmother grow in her backyard, and no one wants to spend $300 or $400 on an ounce when they can just be buying it from their friends that are growing it for nothing, or just go to like the reserves. Most people don't even know that the reserves here in Canada don't have to follow the same licensing guidelines as the regular companies do. So they're able to make highly concentrated doses like edibles and all kinds of stuff, and they're crushing it. Like, because in Canada, we have these Indian reserves that sell like tax-free tobacco and those kind of products. So it's just like the competition is so nuts that even if I thought Scott's Miracle Grow was like, you couldn't lose with it because they were into selling like the parts to do hydroponics. They weren't into selling.
That's what I thought. I thought they would thrive because they were going to be more focused on like the growing end and the soil, and they made that hydroponics acquisition. But
it hurts my heart. I thought Canada would be an industry leader with that stuff, man. And now Canopy's down below like what, $10 a share or something. Like it really breaks my heart. I thought we'd crush that, but the Canadian government came down like just a hammer. No, you can't partner with celebrities. No, you can't put fancy branding. The branding and packaging has to be dull as hell. No. Like, so if you ever go on the Ontario cannabis side, I think they've cleaned it up recently, but like they just made it impossible. They made it like the alcohol industry, but worse. And it's just like, what? Like you just crushed one of the greatest growth industries Canada has. And now it's
what? That's another thing. I feel like maybe with cannabis, it's kind of like it's too early to the party. Like we were saying with, the 90s with the genetic stuff, it just wasn't quite there yet. And the, gene sequencing, stuff like that. Maybe we're looking at a scenario right now where there's still that stigma attached to it. So they are highly limited by the government, and, obviously big pharma, I'm sure, has some vested interests as well. But, maybe it's just a little too early, and like, all right, it's getting legalized now, but we're not there. And then 10, 20 years from now, maybe you see that these are what is used, to treat people's problems and not the pharmaceutical drugs. Like maybe it's just too early still.
Yeah, it's they're all interesting plays, but I got in and out of those. I don't it's hard, man. It's like commodities. They're so cyclical in nature, and unless like you get good branding power behind them, it's just like I know a lot of people are into Planet 13. And honestly, the only bets you can really make, in my opinion, in that industry is on the direct retailers and the stores. The problem is you really need to do your homework on the locations of the stores, because out where I live, for example, there's only like one allowed cannabis store, and it has to serve this massive market in this area because there's no competition. Toronto is nuts. There's like a store on every block, so like there's just too much competition, right? So I feel like Planet 13, if they really dominate the Las Vegas place that's getting really hot right now, I mean those would cyclically be some pretty good plays. But I'd avoid the direct growers, anybody involved in the direct, like just the building it outside of it. Like forget that. Just find someone that's got good markets. Maybe some of them are vertically integrated, which helps. I know there's a couple out there where they own the farms, they own the stores, but so long as the stores are in the right locations, you should do fine. But it sends shivers down my spine. I'm like, I don't even want to look at it. Don't even want to look at it, bro. It's like MO too, right? Like I used to love the tobacco giants, but the only ones I'd buy are like British American or Philip Morris that have global exposure, where there's still a lot of people smoking in these foreign markets. because MO has been a sinking ship for so long and no one sees it. I had a guy read me out yesterday that I had no idea what I was talking about with MO, and I'm like, man, oh man. I'm like, I don't trust them. Their management sucks. They failed on every investment in the
They
last
are
5 years.
they're like the equivalent to AT&T. They're a diversifier. Everything
Yeah.
they touch, they've lost money on. You know, what was it? The Jewel acquisition, and then there was something else too.
Chronos, the whole MJ side. And they're like, oh, well,
Yeah,
when it's legal, they're going to crush. And it's just like, yeah, so I'm sure they're going to have a good track record to prove that they can dominate a market that nobody can dominate. Like, oh, I'm sure, from the examples we've had that they're just going to do fine. It's like, okay, good luck. Their investment in Kronos has just been a shit show. They're terrible, man. I don't know. A lot of people like the tobacco industry. I think for the next 5 to 10 years, they'll be fine. But I think the problem is the rate of decline in smokers for them is exponential right now, which most people don't really want to talk about. But exponentially for the last 5, 10 years, the amount of product, like the amount of consumers they've had has been going down. But how have they been making more money? They just keep increasing the prices, right?
they have the
And nobody,
pricing
everyone
power. Yeah.
overlooks it. They all overlook it, and they're just like, oh, well, it's fine. I'm like, if you're somebody like my mother that's retiring, you want cash flow, it's great. If you're young and you think you're going to hold that for 30, 50, 100 years like J&J, you're an idiot. Like, I mean, they're not going to
and
last.
that's what keeps me from that. I mean, like I had briefly owned MO too, just as a that was like that and Scott's Miracle Grow were what I saw as my cannabis place because I didn't want the pure stuff because it's like I said we talked about it's too competitive, and I just saw it as like a bonus to them. But yeah, not looking so hot, and I forget where I was going with this, but
Oh, can't win them all, man. You can never win
yeah,
them all. But
and just getting back to what were we talking about before with the cryptos and like Bitcoin and stuff. I think that another problem with those Coinbase, Voyager, like Coinbase sounds great, but at the end of the day, if Bitcoin fails, then it's all over, and it's funny. Yeah, it's funny. I saw recently, I think it was my friend Antonio. I had interviewed him on a pod a couple episodes ago, talking about what's the company, BlackBerry, and he publishes like these write-ups. But I think it was him who had tweeted something like, "Is it proven now that crypto is just a global casino?" And like, it's so true. I mean, there's all just lottery tickets. I mean, to me, I feel like if anything's going to make it, it's Bitcoin. But like even that, I mean, it's because it's not holding up to the argument so many people have made is that it'll be a hedge. Like it just moves with the market.
yeah, the only way I was able to buy Bitcoin was looking at it from a place of almost looking at gold. It gives me global insurances against my capital and liquidity. And I look at it as something that if the market ever really does shit tank in a really bad way, I don't know how far Bitcoin can drop with it. But what I do know is I have liquidity with Bitcoin. And I don't know how many people have actually bought and sold it and moved it around, say, wallets in the network, but it is extremely seamless, incredibly cheap. And like, if you wanted to send $1 billion out of Russia, the only easy way to do it is with crypto if you can get your hands on it in the first place or buy it on the private market from China or something like that, right? So I feel like for those reasons, I don't care what the price does. I purely hold it as a liquidity hedge. And I've only got like, I mean, a tiny percentage in it, right? I think I've got like 5,000 in Bitcoin, and I've got it backed up with like a Trezor wallet. So it's all like secured and just protected from like hacks on my computer and stuff. But I love it for that reason. But I'm like you, man. Like I need cash flow. I need to be able to wrap my head around numbers in a balance sheet because
And
crypto is just a
that was
gamble.
another thing that got me actually interested in it was like the interest rates, I'm able to get with Voyager, and I know like BlockFi and a couple others do it too. Well, they can't call it interest now because the SEC will come after them like with BlockFi. But you're getting the cash flow. I love that. Like owning US dollar coin right now, pegged to the US dollar, the value doesn't change, and I'm getting 9.5% interest. Like I can't get that in a savings account, So
I have not had the guts to do that, man.
no.
I'm using the Shakepay wallet in Canada. For those of you that are Canadian listeners, it's the only thing in the world that gives you free Bitcoin at like a really great rate. Like you just log into the app and it's a promotion they've never gotten rid of. And I mean, you make like 50 cents to $1 in a day once you've done it long enough, which is nuts. But I just have a hard time getting a wallet control. That's the thing that always like, there's companies in Canada called like Ledin, which is comparable to BlockFi, into USDC and all this stuff. And I've signed up to it. I watched it a lot. The interest rates on Bitcoin move around a lot, but I just can't do it because like they work as a fiduciary where if you die or something, they will give up access to other like people in your family. So you can have some protection that the thing's not gone forever if you die. But I'm like, the only time you own crypto is when you own the keys. Like that is the only value to it for me. And I'm like, I just have such a hard time even making an interest rate on it because I'm like, then it defeats the purpose of why I'm holding it in the first place, because now I lose control over the fundamental asset
Yeah.
all of a sudden. And it
That's a
scares the
really
shit out of me.
great point, and that kind of then, debunks all the crypto brokerage exchanges,
Yeah.
That's a whole other argument you could make against them too.
The crazy thing too, right, is with these exchanges, like everyone leaves their money on the exchange. And I heard Graham Stephan do that, and it kind of blew my mind. He says, "Oh, I leave most of it on the exchange," and I'm like, "So you don't even own it?" And like that's why I love Shakepay here too. Like when you sign up to the account, one of the first thing it says is, "Don't leave your crypto on our exchange. You should probably have a wallet." And I'm like, most people buying crypto don't even know that much, right? Because that's the asset value of it, is just the pure control. And it's crazy that even the exchange is saying, "Don't leave your money with us because you don't own it." Like it's kind of nuts, right? So, I mean, it scares me for a lot of people that are doing it that way, but it's the same thing when you're lending it for crypto returns. But that's some of the financial aspect from it. But it's not for me, right? Like I'm not going to do that. It scares me too much. I don't want to give somebody the control of an asset that could disappear at the whim. It's worse than cash, in my opinion. But you can make it very untraceable. And like, have you seen how people try and bring it back into the market? They have like all these turning machines where you send it into one wallet that breaks it down into all these other transactions with all this other money coming in, and then sends it out at certain times at random days to all these. Like, it's so crazy, man, to me. And I'm like, yeah, it scares the hell out of me. People should be scared though. You can't get a return. There's no security
Yeah.
backed asset in it. So
And
I
I think
mean,
yeah, and it's like you said, we're all these industries we just talked about, we're living through some very exciting times. I think you said this in the last video we did, that like the rest of our life, we're not going to have this 10-year kind of period with all this revolutionary new technology. And, we should think about that.
it's a good note to finish on. Yeah,
I
man.
think it
That's
definitely is. Yeah.
It's
We're,
funny too. I think people should put a little chart together. I wish I had it here. It's one of my favorite charts because it goes back to the 1800s when you kind of first got the steam engine and then the printing press and then the vehicle and the plane. And you look at how long it took those innovations to happen individually and how long it took to ramp up. And now, for some reason, there's just some kind of evolution in human nature where we're going through this next technological jump, but it's happening at an exponential rate. Not like it was in the past. Like we're seeing innovations within 1 to 3 years happening, right? And it's just weird that all of a sudden, all at the same time, it's not just one industry. Like, airlines were the biggest thing for a while. Then like with autos, like we had that kind of jump in just like every industry, like telecom. But now for some reason, it's every single one of those industries is having a major technological jump all at the same time. And I don't know why. Like it's hard to wrap your head around the human nature behind that and how nature leads up to that, because it's just so astronomical, and it should be marveled, man. It's like I keep saying, if you're sitting on your hands through this time period and you don't know this is happening, like you're going to have some serious fucking regrets by the time you're 50 years old if you're in your 20s now, because this will not happen twice. I mean, this is going to happen once, and then it'll be little innovations here and there, but like it won't happen for another 100 years. Because like we're saying, right, like how do you go from an internal combustion engine to an electric vehicle? Okay, so what's next? Well, we
and
won't
then
know for the
to,
next
yeah.
hundreds of years. Like that won't happen again for hundreds of years. So
That's
I
why I
mean,
feel like too, you look at something like autonomous driving, the market can't even comprehend that right now. And yet
yeah,
20 years from now, we're going to look back and be like, why did we ever let humans drive cars? That was so unsafe. They're looking at their phones, like no one's looking where they're going. And it'll be like ludicrous to people that people ever actually drove themselves.
it's fun thinking about the future, man. Just with like Mars and space travel and like the next 20 years, like you're saying, like we're gonna see more than we've ever imagined. But probably the first cure to cancer, treatment for mental illness, like just stuff that is just gonna be so profound that life expectancy will probably go up. We'll probably see life expectancy over 100, years old as being an average if you can start swapping organs, healthcare, all this stuff. So it's gonna be a marvel, man. And I look forward to coming back and chatting with you about it. So maybe we'll keep
Definitely.
doing these
Yeah,
semi
this was
little bi-monthly updates or something like that. But
yeah, this is cool. And yeah, the moral of the story, don't pay too much attention to the daily news and the market movements. Keep your eye on the long term, I would
awesome.
say there too. Thanks for coming on.
Always a pleasure, brother. I hope you have an awesome afternoon here, and we'll talk soon.
All righty. See everyone next time.